Hello, I'm Paddy Delaney, and welcome to Integrated Infrastructure, a podcast dedicated to bringing you news and views from industry leaders involved in the development, design, construction and management of the many built forms that make up Australia's integrated infrastructure. This is episode 16 of Integrated Infrastructure, and this week I welcome back Mathew Mackey, National Director of Cost and Commercial from Arcadis. This week on the podcast, Mathew and I dig into the 2020 budget handed down by Treasurer Josh Frydenberg last night on the 6th of October. Now, neither Mathew or I are economists, but we're passionate about infrastructure and we talk about the opportunities and threats in this budget and the wider economy. Amongst other things, we discuss the assumptions the government's come up with to create this budget in incredibly uncertain times. We talk about tax cuts and incentives put forward to promote spending and create jobs. We talk about all of the investments into things like NBN, water infrastructure, housing, roads and rail. And we talk about what's missing from the budget and what might fall under structural changes for the economy in the future. It's not a forensic examination, but I hope you enjoy our conversation. Please like, share, comment and subscribe if you do. So without any further ado, here's our budget breakdown. Mathew, welcome back to Integrated Infrastructure. Thanks ever so much for joining me today and being brave enough to join me to break down this year's 2020 federal budget.
No problem. It's going to be an interesting ride, whatever.
We'll do our best. It's probably worth just letting people know that, I actually, you can tell them about yourself, but I actually have a degree in politics and economics, so I should be great at this, obviously. How about you?
I should be interviewing you then, because I've got no background in politics and economics.
Whatever they taught me about politics and economics. Well, politics I can remember because that's just jibber jabber, which I seem to be quite good at. But the economics is probably it's pubonomics, probably more likely. But we'll give it a go. But look, I think we'll start off by let's have a chat about the assumptions. Well, firstly, it's worth saying that look, there's loads of stuff in the press about this, and it's quite clear that this budget is about jobs, and job creation, and the transition from the immediate sort of financial support that they put in place around and during the pandemic. So the job seeker and job keeper, the PAYG payments, all that sort of stuff, and then transitioning now into stimulus to help the economy grow. And I know that you've had an eye on this in your Great Expectations paper that we talked about last time as well. And keen to get your comments on the assumptions that they've made to make this budget. So I'm just going to run through them, and then either stop me or wait till the end, whatever you think, whenever you think is sort of pertinent. But the key assumptions are: firstly, uncertainty is a given, so nobody actually knows what's going to happen. But they have to put something together to try and make their predictions and make the budget. Whether that's what the virus is going to do or the price of iron ore, and everybody's got their fingers crossed for the price of iron ore, obviously. They're expecting we've had a 3.5% negative growth this year, economic growth, and they're expecting about a 4.5% bounce back next year in economic growth. That's an optimistic sort of projection.
And probably just on that, just segueing back to that paper that we did earlier this year, I'd like to say that was clairvoyant when we named it Great Expectations. That was more about what the industry can do come out of the recession and come out of the pandemic, all aligned with that kind of green recovery. But I think that maybe the federal government have taken some ideas from that, and that's what they built these assumptions around. It's built around Great Expectations for next year. It is very, very probably blindly optimistic in terms of what the market's going to do next year and how the market can recover. If you recall in that paper, we went through a number of different economic recovery patterns in terms of what the shape of the recovery could look like, and one was termed the Nike swoosh, so it kind of like drips up like that. And I think the way the federal government have kind of planned it or put this budget together has been around the very fact that be a very, very swift and sudden recovery next year, which I think, for the most part, is probably not a bad assumption. Unlike the GFC, there was no cash around after the GFC. There was no money spent. It's taken a while to get the markets moving in any kind of direction. Obviously, COVID's come in and kind of floored that longer term slow recovery that we're having. The difference is now is that because everything's kind of been under lock and key for the last 6 months, there is actually cash available, and that being the big difference between now and the GFC. The problem is with the uncertainty is when do people actually start thinking about spending that money? Now, whether it's you and I in terms of savings in our tax bill, or whether it's business and whether it's large projects, etc., and that investment coming through to industry. When do businesses start making that jump and recruiting more and spending more in terms of their development and growing their businesses? It's going to be a very, very brave business that does that at this moment in time. It's going to be a very, very brave individual to do that at this moment in time when even the most secure jobs are potentially at risk depending on what happens in the market. So it is built on this kind of blind optimism that we're kind of through the worst of COVID and things are just going to charge on. Again, could they have done anything different with that? Probably not. I think this is the only way that they could have gone. I think they would have been seen to be too cautious otherwise. But what we've seen down in what Victoria's taught us is that a second wave is very, very real. I think the UK now are on their third wave. Not that they ever, had a reduction in numbers from first and second waves, but that's potentially the issue. And the one thing that isn't really they talk about in the budget that this budget is about securing Australia's future, but there is no what if. There is no what happens if there is a second wave. What happens if we end up with a resurgence of the pandemic in New South Wales and Queensland? What happens if that happens? If that happens again, what's that going to do to the economy? Because it doesn't matter how much you throw at these projects, it's still going to have that negative effect on businesses and the industry overall.
Well, that actually takes us on to the second assumption, because the next assumption, because their next assumption is that there'll be local and contained COVID outbreaks, but they'll be able to keep them isolated within, with good track and trace systems and what have you. That they will.
Victoria is a very big space to say it was locally contained, and you could quite easily, as we found out in Victoria, it's quite easy for this to spread.
But Dan's got it under control now, so just letting you know. Another assumption is that there'll be a countrywide vaccination program by the end of 2021. Victoria will be out of restrictions by the end of this year. The state borders will be open by the end of 2020. Well, that's another interesting one, because just today New South Wales has got 3 new cases, which means that Anastasia will not probably be opening the doors to us at the beginning of November, as we were talking about just yesterday. The WA borders will be open by April next yeare. I think this is an interesting one, that there'll be a gradual return of international students next year. That's
probably one of the most optimistic assumptions, because you're only in the international borders then, and that's potentially where the risk of a second and third wave could come in.
Very true, but they're hopefully looking at, and they'll be looking at this for migration as well. Very quick turnaround checks, the COVID tests that they can do at the airport. And have you seen that Canada and the UK are putting on charter flights to bring and quarantine systems to bring international students into the country? So there's certainly something there that we could be looking at. Who was it? Paul Bloxham from HSBC on a call earlier today. He's their chief economist, made the point that we should probably have a think about bringing home the 25,000 Australians on charter flights before we think about international students. But that's another point. Anyway, this is about the budget. I'm not trying to slag anybody off. The very low net international travel next year, which I think we all can assume is the case. Net migration next year is expected to fall 100 by 150. It's supposed to be net 154,000 people this year. Negative 74,000 next year, returning to growth in 23-24. But compared to last year's budget, there'll be 1 million less people than projected in Australia in 2022, and that's apparently like having Adelaide, the size of Adelaide, So that's pretty. So the deficit will be high. This is an assumption which I think is quite solid. We can rely on that.
I think that's the only thing that we could almost guarantee with all this, is that the deficit will be tremendously high.
Yeah. So what's really interesting though is, and this is one of the key points the economists want to stress, is that debt is very, very cheap, and in fact the debt on all of this borrowing we're about to talk about next year is going to be cheaper than the debt that we had in 2018. So the actual value of the debt is less than the debt that we had and the interest that we paid in 2018. So now is the time to borrow if we're ever going to do it.
Yeah. And overall, I personally don't have a problem with the government kind of increasing the debt and the deficit. That's their job. When things are really tough like this, it is their job to try and spend and try and move the economy out of it. The good news is, probably with the exception of China, globally, most of the countries are in the same spot. So we're not losing any competitiveness because by increasing our debt. Yeah. So that's probably not as big an issue as perhaps it once was. Where it will become an issue is if in 2 years' time we're at the tail end of the Nike swoosh and we're all recovering, and then they start increasing taxes substantially to try and recover debt. That's when there's potentially an issue. But very much like this budget, that's further down the track, and we'll worry about it kind of when we get there.
That's something that they've been really made a point to labour, the fact that they have no intention. This is not about raising taxes. This is about creating jobs. So I feel like there'd be another wave of investment before we get any tax rises. I think that would be inflation will be weak, wage growth will be slow, and population growth outside of migration is actually going to reduce. There will be less babies. So it's proven that after economic shocks and babies and economic shocks and pandemics, the birth rate actually lowers. So they're expecting it to decline, and that's on an already declining number for the Western cultures. So declining from 1.68 children per woman to 1.62. So and that then comes with all sort of interesting issues for the future around aged care and healthcare and all the rest of it. But those are the key assumptions, and I think the ones that you picked up on there, absolutely relate to your Great Expectations document. But there's a lot of assumptions there, and everything's on it's on a knife's edge, isn't it? In terms of these things could go either way, and it is optimistic. I hope they're right.
And while I probably seemed a bit negative about that, on how optimistic it is, what do we expect the federal government to be doing at this point? This is the road that they're going down. Whether they're spending the money in all the right areas and whether they've covered everything that they should have covered, or whether they're spending too much in one area over another, we can have that debate till the cows come home. But the bottom line is that they are spending money and they are providing investment and trying to drive the economy forward, which is what you want your federal government to be doing at this juncture. Right. If they weren't doing this, we'd be having an entirely different conversation now. If they weren't just trying to put the pedal to the metal and just try and push everything forward. That's exactly what a federal government should be doing.
Yeah, absolutely. And there is a lot of positive sentiment, excitement. It's certainly driving the confidence, or driving positive sentiment that I've seen today, whether that's in the newspapers, whether it's on the news, whether it's in the on the KPMG breakfast webinar that I was on this morning, or in other things. So it's doing the job so far, and it's getting a good response from even the politicians, the oppositions, whether it's Albanese or Jackie Lambie. They're like, they're not saying it's bad, they're saying it's good, but so you know what I mean. So look, I'm just gonna run through some of these key tax measures. I know that we're not economists, we're not tax experts. We're probably quite pleased about some of the tax cuts. I'm pleased about some of them as a small business, but we're gonna get through these and then talk about infrastructure. But I'll just run through them quickly anyway. So firstly, we're talking about tax. So there's a massive 107 billion worth of tax cuts, cash payments, and wage subsidies to drive business investment and protect the health of Australians in this budget, which is enormous. Personal tax cuts for 11 million Australians. 11 million Australians, that's a lot of people. I mean, in terms of the workforce, that's a massive amount. There are 22 million people in Australia. So if 11 million of them are getting tax cuts, that's fantastic. Businesses with turnovers of less than 5 billion, which actually is 99% of businesses, there's only 1% above that, are going to get the full cost of capital assets deducted, and they need to be used or installed by the end of June 2020, which means that basically you've got to spend money now, make the most of it. I understand that there might be some issues there which might relate to construction industry in terms of if you are owned by a foreign subsidiary. So I thought, CIMIC will probably appreciate that, and then I thought, and then I read later, actually, if you're owned by a foreign subsidiary, then you might actually exceed that number, and
it depends where they draw the line in terms of whether that's local growth, local revenue, or whether it's or whether it's your global revenue from global business perspective. So Arcadis would potentially fall into, I know we earn as much money as CIMIC, but we would certainly fall into that category of international ownership. And what does that mean?
Yeah, absolutely. And I think there's some more to come out on that in terms of clarifying that for businesses, because even if you are internationally owned, and you're part of a bigger group, if you're still spending money in Australia on Australian goods.
And that's why trying to draw the distinction between international owned firms and Australia owned firms is a fine line, because the number of people who are employed by international firms, they're still taxpayers, the businesses that still pay tax in the local economy. There's been plenty of times where, when things have been tough in the country, the global head office somewhere has shut a business down locally, and that's what we don't want to see. We don't want to see more unemployment and more businesses shutting down. So I think it's still important that government do support international business as well, because it creates competition. It creates other options. It creates that opportunity to bring in the skill sets that they may be lacking, and I know that's something else that came up in the budget. But it's all those things together. The incentives might be different for an international firm than they would be for an Australian-owned firm, which is absolutely fine. But I don't think you can disregard international firms as not counting because they're, because they're not Australian-owned.
We know, because we've seen what's happened with JobKeeper and the companies that seem to have been able to pick up on JobKeeper, that this is all very flexible, and if you know the right people, and if you've got the right person lobbying on your behalf, then you'll get the reward. So this is a really good one. Probably not very relevant to you. Certainly relevant to smaller businesses, but being able to claim back tax against losses from the year 2018-19, which is the loss carry back scheme. So it's an instant tax return. I think that's a great idea, because it means that small businesses are going to get cash back in their accounts. It's either going to help them with cash flow, or it's going to help them make some decisions around investment that they may have been unwilling to do, or just give them a bit more of a buffer to be more strategic and think about the future, which I think is great. FBT exemption on owner provided retraining on different jobs, in people into different jobs. It's all right. It does a bit, doesn't do lots, but the fact that they're even talking about reining back some FBT in different areas, I think that's probably a good thing. Removing the recap on research and development investment. I don't know too much about that, but my understanding is that they've limited the amount of money that you can claim back or deduct from your own research and development, which has been a deterrent for a lot of companies, including some construction companies, from spending money on R&D, because there were lots of R&D grants, opportunities to do different things. That's gone. So hopefully there will be some smart tax people out there who will make the most of that, but there'll also be an awful lot of opportunities to do R&D.
And you'd hope so. And the one thing that the construction industry needs is that step change in terms of that technology and digital transformation. Productivity is getting less and less every single year, and it has been for the last 10, 20 years. So you wonder how much lower it can go. But anything that's going to try and improve productivity and increase increase what we can deliver or do. I think John Davies at Australian Construction Association, he says we need to do more for less, and that's not just about building more for less money. That's also about increasing productivity. So that kind of reducing that cap on R&D, if that creates an area where businesses can start actually putting this investment in to try and find different ways of working, it's exactly what the industry needs at the moment.
Definitely. I had Jeremy Blackwell from Lang O'Rourke on the podcast last week, and we were talking about W2B and where they, over the entirety of that project, they standardized the design and the precast concrete on all of the bridges. So basically manufacturing bridges to go into the same process, which means efficiencies in maintenance and all different areas for the future. So Lang O'Rourke invests heavily into that R&D and that centre of excellence space. So I think that's the sort of thing that a company like them, who are really interested in the products that they use, the types of polymers and all these different things that they use in their buildings, will be interested in. Job Maker scheme, hiring credits for those previously on Job Seeker, $200 per week. I'm speaking to a POM, that's my pounds. $200 per week for under 30s and $100 per week for those 30 to 35 years. Good incentive for companies to take on people now, even if it's for a minimum of 20 hours a week, and try and get people back into working. Certainly something I'll be considering. So we can take some juniors on. This is a cracker. 1.2 billion to create 100,000 new apprentices through a 50% wage subsidy. So that's on top of all of the apprenticeships that are already in place. So I think that plays absolutely into the infrastructure investment. So that's in the infrastructure part of the budget. So some interesting things there. Some people will be happy. Some people will think they could have done more, some different things. But again, everything's around jobs and about getting the money moving in the system.
And you can see that when you compare it to previous budgets, they always have the kind of theme about what the budgets are about. And when you actually see the numbers, you actually say, I don't see how that ties up to the theme. With this, it's very, very clear. It's about investment. It's about growth. It's about getting the economy back. It's about jobs.
Well, what was the last budget that talked about spending money?
Oh, it was. It wasn't. There wasn't one.
Well, it was Pink Bats, wasn't it? I wasn't even here. I'm not sure you would have been here.
No.
I think it was the Kevin Rudd and his GFC stimulus.
Oh, that would have been the Building the Education Revolution project. That was probably the last one. Yeah. Probably the last one.
Yeah, and since then it's all been about getting the surplus back and what have you, which is now gone. And quite appropriately so, they need to start spending money. And there's a really interesting argument going on there between Labour and the coalition as well around. Well, you were really mean to us when we spent 50 billion, and now you're spending, $1 trillion over this period of time, and
politics, folks.
Yes, things have changed. So let's just go through. I'm going to stay away from the transport and infrastructure investments to begin with, and just go through some of these other investments that are there, and we'll have a quick chat about those. But the first one is the extension of the first home buyers loan scheme. Which is on top of a recently announced reduced sort of red tape process for mortgage approvals. So you can see they're trying to free up the housing market there and create some activity in some of this latent capacity that's
I think the only issue there, or two issues, and I'm not a mortgage expert, so these comments may or may not be valid. But I think by reducing some of the regulation and some of the red tape, it potentially starts creating the same kind of environment that led to the GFC in the first place. It's about just getting approvals rather than are they the right approvals for the right people, who've got the right level of deposit and all the rest of it, and being able to justify their financial situation. So I think there's got to be careful with that. Also, the bizarrely, we're not seeing in all states massive drops in house pricing at this moment in time.
Yeah.
In some states, like in Queensland, particularly at the upper end of the market, prices are actually increasing. So it's. I was talking to an economist the other day, and he said, bear in mind, this is the recession. There are winners and losers. There are some sectors that are doing really, really well. There's some sectors that are doing really, really bad, like tertiary education, for example. But if you're in health, if you're in industrial parks, and even residential to a certain extent, it's not actually going that badly. In fact, some of those sectors are actually booming. But residential isn't dropping that massively at the moment anyway. So even if you can reduce regulatory red tape, and even if you create more funding for first home buyers, etc., can they still afford to get on the ladder? And they probably still can't get on the ladder, even with that additional funding. There are those things to try and consider with it as well.
We'll see. I mean, I bought my first house in Bristol, in Bedminster, when it wasn't cool, and with a 5% mortgage from Virgin Money, and it was sort of the end of a recession then. So that's what
we're seeing in this recession, even with because state governments and federal government have actually done pretty well at trying to keep things moving, and there's been an argument that they could have done more, could have done sooner, could have released more projects, and that's certainly endemic in each state. Despite all that, it's not like everywhere is suffering at this moment in time. Retail is doing really bad, or bricks and mortar retail is doing really badly. Tertiary education is on its knees. Tourism has been a bit up and down. Tourism is back up at the moment because more people are now, because of the relaxation of restrictions, they're out now. Everyone's holidaying in Australia, so hotels and resorts aren't doing as badly as they were like 3, 4, 5 months ago. So it's not like, but in a recession, typically, from the GFC and all that, is that generally everything is on its knees, and we're not there yet. But you've also got to bring it into the Australian context. We've not had a recession for 30 years. They thought things were pretty bad at the end of the GFC. And it really wasn't. GFC, because of our reliance on China at that point, GFC hadn't really impacted massively here. And we still had things like the Building the Education Revolution, which did a great deal for the industry. So you've got to put these things in context. And I think a lot of it is the very fact it's dreaded our word in Australia, where we haven't seen that word used for 30 years.
Yeah.
So even with like the end of the GFC, they weren't calling it a recession then. Yeah. But then that's why, programs like the BER program, they were there to try and stave off recession. Bizarrely, bear in mind we're in a recession, there are winners and losers to it.
Yeah.
Housing at this moment in time, it's slowed down. There isn't lots of apartments being built, probably because we're at capacity. House dwellings have reduced, but in the area that I live, I've seen more like small subdivisions of 4, 5, 6, 7, 20 houses crop up in the last 6 months, more than I've seen in the last 10 years in this area. So there are things happening on the ground anyway, and new things are still being built. So I don't think housing is quite at the point where it needs a lot of investment at this moment in time.
I think, Kim, my partner's best friend up in Queensland, her and her husband are about to take advantage of that and get on and use it. So I think it's definitely encouraged them to make a decision that they thought they were going to have to wait another year to make. Yeah, because you need it's on a new or to be built home. So a new apartment or if you're building your own home, you only need a 5% deposit, and the other 15% is guaranteed by the government, so you don't have to pay mortgage tax, which saves you money on that. So I think it's encouraging people to make decisions that they maybe would be making in a year or in a year, sort of. So it's obviously working because they're expanding it. So anyway, we'll see, won't we? We'll see if people can afford to pay the mortgages. Defence, they're bringing forward another $1 billion worth of defence spending. I feel like that might be a sort of promoting something that's happened already, to be honest with you. The
defence sector tends to be relatively recession-proof. Defence has to happen anyway, right? So, and I think we found out before, when you actually look at these federal budgets, it's not always that clear to break out what's new this time around and what was already previously committed to. And you've got to really delve into it to try and break it out.
Yeah, because they've already accelerated a 5-year program into 2 years, and I know that they've got more defence spending planned for after that. But certainly the defence stuff that they're doing now is going to keep it has been generating work for contractors, for consultants, and for us at the recruitment end of the chain as well, which has been great. Fuel security, drop in the ocean for that in terms of trying to sort of secure our supplies, 200 million, which will be spent in construction. The gas-fired recovery. Now, this is an interesting one. We touched on it a little bit before we started recording, didn't we? It's $52 million to support the development of 5 strategic basins to support cheap power for people and manufacturing. And apparently in the budget speech, Josh Frydenberg talked about the climate, and then he talked about gas.
Yeah, they're not exactly conducive partners, are they?
Well, it is a fossil fuel, yeah, but it's a transition fuel. So it's an interesting one because there's a philosophical point there, isn't there, between going all out on green energy and protecting your probably your funders, to be honest with you.
There'll be an element industry. But the whole point of a transition, having a transition energy, is that it's a transition. As in, you need to be doing other things to transition to, and that seems to be that's certainly the thing that's missing from this budget. You can't accuse it of being a green budget at all. It's kind of talks about it in reference to make some people happy that they've actually acknowledged that there's a word that they can use, but then kind of sidestepped to the left and gone straight to the gas. So, seeing that there wasn't any kind of investment for any kind of green technologies or any alternative power sources was a little bit disappointing, I suppose.
Well, I thought
in this market with all the investments they're doing, surely that is the industry you want to get moving now.
But I mean, they've been investing in this stuff. There is actually some money. They just haven't talked about it. Where is it? ARENA, which is the Australian Renewable Energy Agency, has got 1.43 billion. Sorry, so I knew it had it somewhere. There is 1.43 billion of continued spending. So actually, that's just a continuation of what they were doing previously. But it's not that they're not doing something; it's that they're just not re-announcing. They're not re-announcing that bit.
And the obligations of ARENA, and there's another group as well. I can't remember what it's called. Kind of government-backed entities. Clean
Energy Corporation.
Clean Energy Finance. I think it's called.
That's it.
They actually need to increase their business model, if you like, and their influence to try and drive this a little bit more, because they're almost like advising parties at this moment in time, saying, here's some good ideas that you should consider. Whereas really they should be driving whatever these organisations are recommending, they should be bringing to the front of budgets like this, for example. So if I had a couple of major criticisms, the lack of any kind of green agenda on this budget would be one of them.
Yeah, I'd agree. Absolutely. I mean, coming on from that, there is actually some money in here for recycling. So they've said no more, we're banning exports overseas of our plastics and recyclables. I don't know how many people.
But as you said before on the pre-call, didn't you say that's because no other countries were taking it anyway?
That was me being. I don't know if that's factually right, but it's. But I'm sure that it's almost factually right. I'm sure that somebody would take some of our rubbish, but the reality is that we should be doing it at home anyway. I mean, look, I've had Garth Lamb from Regroup on the podcast talking about recycling. I've had Jason Pugh from Lang and the East Rockingham Waste to Energy project, and I've got a real passion for that space. And I know David, the CEO of Regroup, will be very happy about the fact that recycling and waste is just getting highlighted in these ways. So I think that is a positive. We'll just see how far 250 million goes within that market. It'll probably go relatively did well, I think, because the recycling sort of units and manufacturing sort of or the processing of waste isn't that expensive. The sort of kit that you need, and unless you're turning it into energy, and then that's something else. NBN.
Yep.
Look, there's a whole sort of, we could bring Turnbull in here and Abbott and the whole argument about fibre to the node and all the rest of it. But either way, whatever that was, it's pretty good. There's another $4.5 billion worth of investment going into into the services market, and they need it. They need it. So that's putting aside whatever happened in the past, is pretty good. And then something that you've been reading up on, water. They're spending a lot of money on.
Which is interesting, because $3.5 billion rolling water infrastructure fund, and I haven't quite got to grips with what all that means yet, but it's certainly investing in terms of regional and rural Australia. So bear in mind, we're a country that is, annually is always struggling in areas from drought. The bushfires, which seem a dim distant memory now, pre-pandemic, all these things require water to a certain extent, and good quality water. So to do more with our waterways and do more in terms of our water retention is definitely what we need to be focusing on. I'm surprised it hasn't happened up until now. But of that $3.5 billion rolling fund, how much of that was already pre-committed to? Again, don't know.
1.5.
But I think it's a good message that they're beginning to focus on it.
Yeah, they're putting so they've actually been announcing those projects, sort of dripping them through, excuse the pun, recently in terms of those dam projects, and they've been sort of highlighted this year. So I think that's an additional $2 billion into that fund. To make it 3.5. But on top of that, they've got the Water Supply Resilience Programme, which is another $2 billion for priority water infrastructure investments around Australia. So those are two different programs. So that's actually a hell of a lot of money there going into water development, which is good, because I've been in Australia for 10 years, and there's really been very little until recently, sort of in terms of investment in water infrastructure. And as you quite rightly pointed out, it's needed. So moving towards infrastructure, before we get on to the sort of the regional stuff, there was also something that we didn't talk about in our little sort of preamble before we started recording. But there's $1 billion going towards local roads infrastructure, so money that's being pushed out to local councils. Which is a lot, for road maintenance and road upgrades and things. And it's always, people talk about productivity an awful lot in Australia. We need to improve productivity. It's actually stuff like that does improve productivity. The ability to get goods and services from one space to another, quicker or faster, whether that's in the upgrade of a road or a bridge or whatever it is. All of that stuff goes towards productivity. So although this budget doesn't really talk about productivity a great deal, you can see how a lot of these things are actually going to be helping get improve productivity overall.
Absolutely.
But look, let's talk about the big stuff. To tell us what you've sort of found in terms of the chunky stuff for infrastructure.
Yeah, so I had a quick look at the numbers, and they're talking about an extra $10 billion in infrastructure spending. When you look at the media release, it talks about $110 billion over the next 10 years. And then when you break it down, you realise, in certain parts, $100 billion has already been kind of mentioned or committed to previous budgets, and this is a $10 billion extension. But I had a quick look over the main states to see if there were any kind of winners and losers, and it was quite clear. And I've only focused on New South Wales, Victoria, and Queensland because of the respective sizes of those states. But when you actually look at it, there's definitely a clear winner. So New South Wales, in terms of new project funding and additional funding for existing projects, they're getting $2.7 billion in transport infrastructure. Queensland, interestingly, is just ahead of Victoria, but not by an awful lot. They're getting $1.3 billion, but there is a bit of a rub to that, is that 57% of that $1.3 billion is tied up on one project, the Stage 1 Coomera Connector. So when you actually break that down, it's actually more money than Victoria, but significantly less projects. Victoria have got just under 1.2 billion, 1.15 billion. And again, major projects. But when you actually break that down further, New South Wales and Victoria, a lot of the funding is to do with rail, quite a few road projects, but certainly a lot of rail projects. Queensland is predominantly all rail. All roads. The biggest criticism that we have living up in Queensland is that there's less of a focus on the rail aspect, which for a state the size of Queensland, you could fit, I think it's the equivalent of Spain, France, and the UK all inside of Queensland. It's that big. Not focusing on rail just seems like ridiculous, particularly when you compare the rail spend that's happening down in New South Wales and Victoria. But when you look at the overall transport infrastructure funding, New South Wales, as always, is becoming the big winner with more than twice the same level of transport funding that's happening in Victoria and Queensland.
Yeah, that when you look at the you were talking about that 100, and so you've got the original $100 million funding, and then you've got the additional just in these bits that we're talking about here, it's 7.5 billion, and then it goes up to 14 billion if you add in those other bits that we just talked about, the water, the NBN, all those other bits. But so for New South Wales, it's 2.7 billion, which takes up the overall commitment to 39 billion. So including that total package. For Queensland, it's 1.3 billion, which takes up the total commitment to 28.5 billion. And for Victoria, it's 1.1 billion, which brings the total infrastructure funding to 31.5 billion.
Yeah. There's a big disparity there between the three states, really, isn't there?
Yeah, I mean, look, we've got Gladys and you haven't, so...
Don't I know it? Yes.
So, yeah, I mean, look, there must be reasons for that. I'm sure that the stuff like the second airport probably pumps, really increases that number in terms of the federal funding there.
I also think it's down to where those states have actually developed their pipelines to as well. New South Wales has got a very, very extensive pipeline, and they've probably done a lot of groundwork to get projects to a certain point, which enables federal funding. Victoria's the same, but I think Victoria's a bit of a smaller state, older infrastructure, so it's going to take them longer to get it to. They're building new infrastructure, but got a lot of existing historic infrastructure as well. Whereas New South Wales, a lot of it is new and being upgraded. Queensland, we haven't had an infrastructure boom here for at least in the 10 years that I've been here. So and it's all built around roads because in Queensland it's more about the region. It's more about while in South East Queensland that's where all the money is. From a politician standpoint, all the voters are in regional Queensland, so they have to try and spread it around. And we don't have the same budget that New South Wales and Victoria does to do that. So I think the size of Queensland is actually kind of puts us in a worse competitive situation more than anything else.
Yeah, absolutely. And the thing about that 39 billion for New South Wales is that includes Snowy Hydro, I presume, as well. And Snowy Hydro is at least 4+ billion. I think it might even be 6 billion or something like that. Yeah. So actually, when you start weighing it out with populations and all the rest of it, and as you said, that ability to sort of develop that infrastructure. So what's really interesting about this, Matthew, is the fact that it's on a use it or lose it basis, which admittedly we haven't quite got heads around that yet, have we? But the way that it's been phrased is that if the states don't use this money, I think before the end of 2022, it might be 2023, then they will lose it, and they will lose it to another state. Yeah. So basically so that's about getting these jobs to market quickly, and I think that the idea is these are supposed to be shovel ready. One of your favourite phrases.
Yes, yeah, which is shovel ready is great, but as I've maintained before, it's this is the big end of the market. But it is only one end of the market, and it's probably more incumbent upon the states rather than federal. But we should be using this time to keep all elements of the supply chain busy, from your architects, your project managers, your transport planners, your urban planners, your urban designers. That entire part of the industry needs to be busy, because in 2-3 years' time, when a lot of this, these shovel-ready projects are finishing, then what's going to be on the back of it? Because if they're waiting for private sector to take over, private sector may very well take over from an infrastructure perspective if they've not invested in terms of the pre-planning and the business cases and the feasibilities, and they've kind of pushed that off and continue to push it off with the focus of shovel ready. All that's going to do is create another lag later on. So going back to that optimistic, economic growth, it could get slapped down if they don't maintain the industry as a whole over the next 2 or 3 years.
Yeah, I think there's enough work that's been, and this was one of Albanese's sort of criticisms last night, is that governments at the moment are very, very good, and I don't think he was just referring to coalition-led governments, whether that's the state or say New South Wales, is that they're very good at announcing projects but haven't actually delivered them, which I think is the theme of 2020 anyway.
Mm-hmm.
So I think there's an awful lot of work that's going to keep all those people very busy, and to get these into the market as well at the same time. Either way, I think this is a really good budget in terms of the investment that they are putting in, and the money that they're going to put to the market. The timescales that they're looking at on some of it is relatively short term. So from a construction and an engineering point of view, I'm pretty happy with it. And I don't know how much more I could have wished for from my point of view. So I think you got to sort of congratulate them on what they have done. There are things that they haven't done. So what would be the things that sort of the clangers and the holes in this for you?
Well, I mean, at the end of the day, no government can do everything. Despite happy to borrow money cheaply and increase the deficit, there is a limit to how much they're going to be able to do, because some of it is just going to be about how many people do they actually have to deliver all this themselves from a government perspective. Not the government's ever been shy about employing people. But in terms of what's not included, I mean, we've mentioned the green agenda before. No focus on climate change and kind of disaster management was a bit of a disappointment, particularly when you think about the horrific bushfires we're having down in Melbourne and New South Wales. Maybe that's because they've decided to do the management process a little bit better. Maybe that's changed. I don't know. But from a disaster perspective, you'd think more funding for federal fire services and all the rest of it would have been a key part of this, bearing in mind how recently those bushfires were. And that all feeds back into climate change as well.
Are the federal fire services, though? I thought that was the whole issue about ScoMo getting the blame for the bushfires, but actually he couldn't do anything about it.
Yeah, so I misspoke there. So it's not a federal service, but in terms of those volunteer services, like we've got
putting more money into those,
Yeah, more federal funding to support those agencies would definitely be key, because it's quite clear you can't cut back on that stuff. You need to build it up. And that all feeds into the climate change piece as well. No program or initiative around social infrastructure, and that isn't just schools and health. I think, bear in mind where we are, health is obviously a big issue at this moment in time. So I'm surprised there's nothing in there underpinning health, and that's probably because, again, it's state run, but there should be some kind of federal incentive, federal support there. But also, equally, aged care. You mentioned before about declining population growth. Aged care is an issue now. It's going to be a bigger issue in 10, 15 years' time. But 20 years' time, I might be one of the people in those homes, for God's sake. So that, driving that, an improvement in aged care and trying to drive investment in that is certainly something we should be focusing on. And governments tend not to, mainly because it's probably not sexy enough, and it's probably not going to get them a lot of votes, and it's more money that they could be spending on something shinier and new. So again, that's something that some government at some point, federal, state, or whatever, has to get to grips with. And then the last one would be tertiary education. There's always an argument of how privately funded or government funded universities are. Universities are really, really struggling at the moment in time because of lack of international students. If anything, it kind of lays bare the issues we have in terms of having so much reliant on international students, but in a declining population, what else are we going to do? We've got some of the best universities in the world, which are just really suffering at this moment in time. So having no real funding or any kind of packages that is going to support universities was also a bit of a surprise. Because a lot of the packages they've got forward aren't necessarily going to help the university institutions.
Yeah. Universities is certainly one that I saw as needing, additional support. There's nothing for culture and arts, nothing in there at all, and they are, those are two areas of would you call them business, society, our fabric of life, whatever it is, that really are suffering very, very badly at the moment. And I mean, unless you're Natalie Portman or somebody flying in from, Tom Hanks flying into Queensland to do a new film, in which case, good for you. But in terms of, community arts, community theatre, or on the sort of national level, there's no money for them. Childcare, I think, is really missing. So the government did some great stuff throughout the sort of the pandemic and the lockdown period in terms of funding that and supporting families in that area. They're going to continue doing it in Queensland. So there is sort of additional funding for that for Queensland. I think it's like a 25% subsidy on childcare for a certain period of time. But in terms of actually then improving that longer term, there isn't anything in it for that. And then that takes you on to what you call sort of gender or women's issues in terms of there is an imbalance in this pandemic in terms of the number of men versus the number of women that are losing work. After a recession, it's much easier for men to get back into the workforce than it is for women.
Yeah.
There's questions around whether there should be something within the tax system, which means that women aren't penalised for going back for work through childcare and things like that, which means that actually sometimes it's just not even worth it. You're going back there, there's a lot of women that go back to work for satisfaction or for valuing themselves and adding something and giving a contribution, but actually they get very, very, very little for it in any material sort of wealth, as it were. The other thing is super reform. So women have disproportionately taken money out of their super throughout the pandemic. That are typically smaller pots of super and harder for them to then rebuild them up again. So there's lots of issues around that, and a lot of some of the things that we've just mentioned there are things that they could actually throw cash at right now. But as you said, the cash has to stop at some point, and you can't throw cash at everything. And some of these things are actual structural reforms. And I think that might be phase 3. I'm pretty sure that's phase 3 of whatever the government needs to do in terms of, we talked about that immediate sort of emergency resources that they put on the pandemic. This is the stimulus, and then there's the structural reform stuff to come. I hope it comes. If they don't do it, Labour will do it, and they'll miss an opportunity. I almost wonder, I think the next election will be Labour and the Liberals talking about who has the better structural reform programme, presuming that we come out with some sort of recovery anyway. But there are lots of issues that need attention. But yeah, look, I think we've thrashed this thing, and
you said you'll never did a 20-minute podcast, and I think we talked for 45 minutes. So
excellent. Well, I like the sound of your voice. Anyway, look, leave us with some sort of final thoughts there in terms of. I think it's a good budget. I'm happy. That's it in a nutshell. My sentiment's positive, good, upbeat, cautiously optimistic. How about you?
Yeah, so I think just summarising what I said right at the start, it is a very, very good budget. It's doing what it purports to do, which is about creating jobs. It is, I'll leave the term again, blindly optimistic about next year and about what's going to happen with COVID, because it makes the broad assumption that there will be no additional waves of the virus next year, because that and to the point where states have to shut down, or significant parts of the state needs to shut down. There are winners and losers in it, in terms of depending on the state, depending on the sector. But overall, I think it is a very, very good budget. And I'm not sure, despite our criticisms and pointing out what isn't in there, the big one being there's no drive there for a green recovery, which certainly the thought leadership we're driving at the moment is all about that green recovery and use this as an opportunity to really start that process rather than continue to talk about it. They haven't taken that opportunity to do that, which I think if I was going to be disappointed with any of it, that is the biggest disappointment. They've not really driven that green recovery as part of their overall package.
Yeah, absolutely. I agree. Look, I could even talk to that point, but I'm not going to. I'm going to thank you. I'm going to let you get on with the rest of your day. I've put you on the spot today, and I think you've done brilliantly. And I think there's some real gems here for people to listen to and hopefully enjoy. So on that note, I will wish you well and hopefully talk to you soon.
No problem. Thanks for having me again.
Thank you. Integrated Infrastructure is powered by North Search, specialists in executive and technical search across engineering, design, construction, property and energy markets in Australia. If you'd like to find out more about North Search or get involved with this podcast, you can click on the links in the show notes or email me directly at the address on the screen. We hope you enjoyed this episode of Integrated Infrastructure. Please tell your friends and colleagues if you did, and we hope to see you again soon.